All right, so today we're going to kind of shift gears a bit and dive into something that might seem, well, a little bit practical on the surface. We're talking about saving versus insurance to understand not just like the mechanics of these two financial tools,
Right.
but really how our own feelings about risk factor in.
Yeah, and that's where it gets really interesting, right? It's
Yeah.
not just about the numbers. It's really about psychology. Dives right into that with these three categories of how people view risk.
Right.
You know, you got your risk-averse folks,
Yeah.
your risk-loving, your risk-neutral.
And they use this example of a teacher offering 10 yuan,
Yeah.
but with different levels of risk involved to kind of bring it to life.
Right.
So, someone who's risk averse would just take the guaranteed 10, no question.
Yeah, absolutely.
But someone who loves risk, they might go for like a scenario where there's a smaller chance of winning a way bigger amount.
Right.
Even if you know statistically it averages out to the same thing.
Yeah. Yeah, it's like that classic casino scenario that, you've got the person who wants to just lose their chips quickly.
Right.
So the risk is over versus, the high roller who lives for the thrill of potentially winning big.
Okay. But how does this play into saving and insurance? Because honestly, when I think about saving, I usually think of it as like the safe option.
Even save, especially, when you're saving for a specific future need, like healthcare costs way down the line, has an element of risk built in.
I'm not sure I follow.
Think of it like this. You're diligently saving for those, potential medical expenses in your older years.
Right.
But there are two very different possible worlds that could unfold.
Okay.
Right. In one, you remain healthy and those savings become a nice bonus.
Right.
But in another world, you encounter significant health issues and suddenly those savings are being depleted.
So saving for something like that is a bit like placing a bet on which world you end up in. Wow. I hadn't thought of it like that before.
It really highlights that variability of saving, right? Now, contrast that with how the text about insurance.
Okay.
It describes insurance as a way to try and create income consistency across all those possible worlds.
Okay. That makes sense. So instead of having wildly different outcomes, insurance is more about smoothing things out.
Precisely. Think of it visually. Imagine like a graph where your income is represented by a line.
Yeah.
With saving alone, that line might have like dramatic peaks and valleys depending on what happens in life. But insurance tries to make that line as steady and predictable as possible. It's like paying a premium to make sure your income graph stays within a certain manageable range.
So even though you pay a premium, whether or not the specific thing you're insured for happens, you're essentially buying peace of mind,
Yeah,
like a buffer against those financial shocks.
that's a great way to put it. Insurance is just a service meeting a need just like any other service out there.
Right.
You want chocolate,
Yeah.
you buy chocolate. You want income stability,
Right.
you buy insurance.
And I guess people who are more risk averse are probably the ones most likely to see that need for stability and opt for insurance.
Makes sense, right? But here's the thing. Not everything can be insured. 3 key criteria for something to be considered insurable.
Oh, like what kinds of things?
So the first is that the event has to be probabilistic.
Okay.
So something that might happen but isn't guaranteed. You can't, for example, buy insurance but a medical condition you already have.
Right.
That's not insurance. At that point, it's more like prepaying for treatment.
Okay. That's logical.
The second criterion is that the risk has to be uncorrelated across individuals.
Okay.
So it can't be some global event that affects everyone at the same time.
So like a massive pandemic or a giant asteroid hitting the Earth.
Exactly.
Those wouldn't be insurable because everyone's in the same boat.
Exactly. It has to be a risk that some individuals experience, but not everyone. Think about car accidents.
Right.
They happen,
Yeah.
but not to every single driver.
Right.
So that risk can be pooled and managed through insurance.
Got it. So what's the third and final criterion?
The event has to be outside of your control.
Okay.
You can't insure against something that you have the power to directly cause or prevent.
Interesting. So things like getting sick or being in a car accident fit these criteria because they're largely unpredictable and out of our hands.
Right. But things like, say, failing an exam or breaking up with your partner wouldn't be insurable because you have some degree of influence over those outcomes.
Right. That's a really good point.
Yeah.
So insurance is all about managing those risks that are to some extent a matter of chance. The things we can prepare for but can't fully control.
Exactly. And this leads us to a bigger question that raises, does the existence of insurance actually reduce the overall risk in society? Or does it simply redistribute it? Now, that's worth thinking about.
So it sounds like saving and insurance are both tools in our financial toolbox.
Yeah,
But they kind of work in different ways when it comes to managing risk.
that's exactly it. And it's not an either or situation. It's not
Right.
like you have to choose one or the other.
Right. You can have a savings account and also have insurance.
Absolutely. In fact, a well-rounded financial plan, usually involves both. They serve different purposes and they each have their own strengths.
So if I'm hearing you correctly, saving is more about building towards goals,
Hmm.
like that dream vacation or a down payment on a house, while insurance is there to protect you from the unexpected.
Yeah, and let's not forget the different ways they handle risk saving, as we discussed, exposes you to those variable outcomes.
Hmm.
You might end up with a substantial nest egg, or you could see your savings depleted if you encounter those unexpected expenses.
Like that medical emergency scenario we talked about.
Exactly. Insurance, on the other hand, aims for that stability we talked about.
Yeah.
It's about smoothing out those financial bumps in the road so that no matter what life throws at you,
Right.
you're not completely derailed financially.
This is making me realize that even though I consider myself pretty risk averse, I probably already have several types of insurance in my life.
Oh, yeah, sure.
You know,
Think about it. Car insurance, health insurance, maybe renters or homeowners insurance.
right.
It's all about mitigating risk, creating that financial safety net.
Okay, so let's circle back to that thought-provoking question that they
Yeah.
posed about insurance and risk.
Yeah.
It asked if commercial insurance actually reduces overall risk in society or just redistributes it.
Right.
What are your thoughts on that?
Well, it's not a simple question.
Right.
What's fascinating to me is that insurance doesn't actually eliminate risk. It essentially pools the risk of many individuals together.
So instead of each person bearing the full brunt of a potential loss on their own?
Right. They share that burden with a larger group. The insurance company manages that pool of risk using statistical models and something called actuarial science
Right.
to calculate premiums and payouts. It gets pretty complex.
Yeah.
But
So in a way, insurance does reduce the risk for each individual.
it does in a way.
But from a societal perspective, the risk itself is still there.
Mm-hmm.
It's just been kind of spread out.
It's been spread out, yeah, like sharing the weight of a heavy object.
Yeah, that's a really interesting perspective. That highlights how important it is to understand what you're getting into when you buy insurance.
Absolutely. Reading those terms and conditions isn't just about avoiding legal jargon. It's about understanding the contract you're entering into with the insurance company
Right?
and making sure that it aligns with your needs.
So we've covered a lot of ground here, from those fundamental risk preferences
We-
to the mechanics of how saving and insurance actually work, and even touched on the broader impact of insurance on society as a whole.
And there's still so much more to explore, but for now, I want to leave you with one final thought.
Yeah, I'm all ears. What is it?
Think about this. How is technology impacting the worlds of saving and insurance?
Hmm.
How is it changing the way we manage risk and think about financial security in this digital age?
Yeah, that's a great question to think about. It seems like technology is disrupting just about every industry these days, and finance is no exception.
It really isn't. And it's not just about convenience, although, being able to manage your money from your phone is definitely a game changer.
Right.
The real impact, I think, is how technology is giving us access to personalized financial tools and information that were unimaginable just a few years ago.
I see what you mean. We can track our spending habits,
Right.
set savings goals,
Mhm.
even get investment recommendations, all tailored to our individual circumstances. It's incredible.
And on the insurance side, we're seeing things like usage-based insurance, where your premiums are calculated based on your actual behavior. For example, with car insurance,
Right.
your driving habits can directly affect how much you pay.
That's amazing. It's like insurance is becoming more responsive to individual needs and choices rather than just broad categories.
It is. And as technology continues to advance, this trend is only going to accelerate. We might even see things like AI-powered risk assessments that can predict potential health issues and adjust insurance premiums accordingly.
Wow, that's both fascinating and a little bit unnerving. It raises all sorts of questions about data privacy and the potential for bias in those algorithms.
You're absolutely right to point that out. As we embrace these technological advancements, it's crucial to be mindful of the ethical considerations and potential downsides. It's a powerful tool that needs to be used responsibly.
This conversation has really opened my eyes to how much more there is to saving and insurance than I initially thought. It's not just about numbers, it's about our psychology, our relationship with risk, and how technology is reshaping the entire landscape.
I couldn't have said it better myself. At the end of the day, it's about understanding your own needs and priorities, being informed about the options available to you, and making choices that align with your financial goals and values. Knowledge is power, especially when it comes to your financial well-being.
Well said. And on that note, I think it's time for us to wrap up this deep dive. We've covered a lot of ground, from those fundamental risk preferences to the complex world of insurance and the transformative power of technology. It's been a fascinating journey.
It certainly has. And remember, this is just the beginning of your exploration. Keep asking questions, stay curious, and never stop learning.
Thanks for joining us on this deep dive. We hope you found it insightful and, dare I say, even a little bit enjoyable. Until next time, keep those brains buzzing and those deep dive requests coming.